Good afternoon, everyone. This is just a quick market update. The last video I sent out, of course, was the Monday video on forcing trades. And like I said in the chat room and in that video, just based on the market and based on me just breaking my rules and a general disgust with the market action we'd been seeing and just breaking all my rules on Monday, I stepped away for the last couple of days. Was going to come back today, but I didn't want to force anything in this market. And if there's anything I've learned over all my years of trading, it's that when you find yourself breaking rules, when you know you should not be in a tape that really, really sucks, it's time to step back. And that's exactly what I did over the last couple of days. I know some of you weren't happy about it, but it's one of those things you have to step back when you feel that this market is not working. And like I've said over the last few days, this is not a normal market. It did not feel well. And usually when I have that kind of urge or feeling, a nifty little sell-off usually is not far behind. And over the last couple of days, we've seen the markets get beat up. But sitting all cash from Monday, that's the place to be. Of course, we had a little bit of a rebound somewhat today after news that Saudi Arabia had gone and bombed Yemen, and that is going to be supportive of really the only sector that's actually been bouncing over the last few days. That is the oil sector. If we look at the USO chart, you can see really before that news had happened, we'd already seen a bounce in oil prices, just simply based because we had the dollar selling off. But we got a close over this 50-day moving average today on oil, and it will probably end up being the sector to play over the next few days. It's the only sector that's really up over the last week or so, 3.4% advance, while all the other sectors have gotten hammered. Now, what really started this malaise in the market, I believe, was the biotech sector. This is the IBB, Biotech iShares. This was action we talked about in the video this weekend when we had a lot of biotech stocks posting that big news on Friday, and we had a pop reversal. And since then, we've come all the way back down to the 50-day moving average. Now, this was similar to the bottom we saw on heavy volume, but less heavy than what we've seen recently back in February. And then after that retrace, it was off to the races again. Are we going to see a similar kind of situation right now? Usually when you see the biotech stocks get hammered, and then of course yesterday the market was down 290, we had technology stocks leading that down. When you see those high speculative sectors getting taken to the woodshed, it is usually a good idea to step back from the market, and that's exactly what I've done. Reevaluate things. I'm clear-headed now. I actually like taking these mini breaks, especially when the tape is bad. I've been doing it over so many years of trading that I've learned that usually is the best thing to do. Now, the indice that really is troubling and still is troubling, and we've mentioned it many times over the last several weeks, is the Dow Transports. Now, this has been the indice that has led this market throughout this bull market, and it has not been able to make a new high since it posted its high back late last year. Now, we've had the Dow continue to romp to new highs, but we've had the Dow Transports selling off, and now with this pop in oil prices, look at this sell-off we've seen in the Dow Transports over the last 3 days. I mean, this has really taken it on the chin, and we actually moved below the 200-day moving average for the first time since we had that big sell-off in October of last year, where we actually saw this indice collapse 1,000 points over the course of about 3 or 4 weeks. Right now, we're sitting on a 500-600 point collapse, and if we're to see a similar situation as we saw back in October, we could see this indice down another 300-400 points, especially on that break below the 200-day moving average. Looking at the Russell, again, the candles that we're seeing on the indices today and the action we saw, we had that gap down today on the Saudi Arabian news. Oil prices up. Now, when you step back and consider that if we had this same kind of situation about a year ago, Saudi Arabia bombing Yemen, we would have seen oil prices up $20 a barrel, not the 2 or 3 that we saw today. So we could have seen some nice short covering supporting the market today. It's Friday. The question is going to be, are shorts going to cover over the weekend, or are we going to see people looking to get out in case we get some weekend news risk? And, it's going to be slanted either way on which way it's going to go, but I would say oil stocks are probably the sector to look at right now, just simply based on that. Wanted to show you guys real quick too. This is a monthly chart of the Dow, and you can see really over the last 3 years, we have only, the biggest 2-month drop we had was back in 2012, and since then it's pretty much only been a monthly red on the Dow. Now we could potentially be seeing some topping action here on the Dow. The support level is 16, it's about 1,000 points below. And then the 200-day moving average is way, way down there. But, if I was looking for a decent-sized correction, the 50-day moving average at 14.5 would be it. And that would mark about a 20% decline. Not that we're going to do that, but just, throwing out this monthly chart here on the Dow. Looking at the McClellan oscillator, we're still not at a level that we usually see on big sell-offs. Usually we're looking for negative 40, 50, and especially 80 when we're going to call these reversals. We're still only in the negative 20 zone, so it's still up in the air whether this sell-off is over or if it's only beginning and has a few more days left in it. If we go back here now and look at the Dow, you can see now while the Dow transports here, and if we tighten this up a little bit, Dow Transports has broken down below the uptrend support and this morning had breached the 200-day moving average. We're still pretty far away from that happening on the Dow. And if we go along with our thought that the transports are leading the Dow, this could be a potential target in the coming days. Now, I'm not saying we need to run for the hills, but the way the trading action has been, a good slap up the side of the head on the market is not such a bad thing. Now, I know that there are stocks moving. There are stocks moving every single day, no matter what the market's doing. If a meteor was hurtling towards the earth and the stock market was crashing, bomb shelter stocks would be running. There's always something moving in the market, but it's been one of those kind of markets where you have to force trades. You got to try 3 or 4 stocks to get the one that moves. Do you take this quick gain? Do you hold on? Do you buy a full position? And, those kind of, can I find another sucker to buy my stock from type markets are not the kind of markets I like to throw a lot of ammo at. And, that's part of the reason why I backed up. Let's see what happens tomorrow. We can look at some oil plays. If we actually look at the UWTI, this is an oil ETF. The 50-day moving average is at 294 now. It has been unable to breach this level throughout the big sell-off in oil. So that is definitely a level to keep an eye on for potential trade in the coming days. You've also got stochastics breaking up through 50. Big time volume increase over the last several days. Money flow has now gone positive. You've got stochastics breaking the 50 level. If you're looking for a cheapo way to play oil, this could potentially be that way of playing it. Also could end up actually being a decent swing play with maybe 15-20 cent trailing stops. Another stock that's actually in that sector as well, and it's on the pop scan today, is TPL, Triangle Petroleum. Just looking at the chart, you can see here we've got a 650 break with 550 break, 575 to 6 plus potential target. And then, if you're looking for a stop loss level there, on the pop scan we've got 540, but if you've got a little bit of rope and you're looking for an oil play to swing, not a bad oil play swing, maybe 525 stops. Another one that really looks nice on this oil movement, and Snowman has been playing this one, is ATLS. Now, ATLS did a spin-off. The company got bought out by a giant petroleum stock. They spun off some assets. It pays about an 80-cent dividend. This was the spin-off action here, and as is typical with spin-offs, they sell the shares. Essentially you get free shares in the company. Looks like we have a potential bottoming action set up on this one, and with the push and strength in oil stocks right now, you got a 650 break. You've got MACD looking to try and cross. You've still got stochastics under the 20 level, which is something I really like to see. and you've got RSI about to peep up above the 30 level. Now, this is another oil play. If you're looking for an oil play to swing that plays a dividend, that is really not a bad play here. The 650 break, you could give yourselves 25-cent stop loss tolerance on it. And, you know, this is a stock that always has bounced back to its 20-day exponential. Now, this is a new stock, but the chart is pretty much the same. And if we just go off the chart, you know, the 20-day right now is at 719. That's about 75 cents higher. So you've got about a 25-cent down risk, 75% upside risk. With the strength that we're seeing in oil right now, not a bad risk-reward play at all in this kind of market. So this is definitely a nice little oil play to keep an eye on. And I actually mentioned it in the chat room, I believe, on Monday for those looking for some oil plays. So this little bit of consolidation, what they're seeing down here, could make for a nice little swing action on the strength we are seeing in oil right now. Now, there's also another little thing that we saw, you know, being talked about, and you'll probably see it being chatted about a little bit more. Monday, Tuesday, Wednesday. And it was regarding the SPY, but it was almost the exact same on the Dow. Monday, Tuesday, and Wednesday, we had the S&P 500 close at the lows. So essentially what that means is zero bounce. Now, the market this year so far, I mean, it's a small little window of sample size, but only one day this year did the S&P 500 close at the lows of the day, and that was actually 2 weeks ago. And we've had three in a row. They call it three black crows or whatever. Kind of bearish seeing that happen. Usually you see some sort of bounce off the lows during the day, and it's just something to keep in the back of your mind with all the bearish chatter that's out there. This is not a market right now to be pressing your bets. This is a market where you see what happens intraday, you take the little scraps and pieces there, but this is not a market where you push a lot of your chips in, okay? Just be very, very patient in this market. Try not to force trades. I'm going to see if we can find some trades tomorrow. If we can't find trades tomorrow, so be it. You know, we'll wait till next week. I am not forcing trades in the market just so that I can call a stock. Sometimes the best trade is no trade. So I'll see you guys all in the chat room tomorrow, and have a great evening. Bye.